Okay, guys. Trade recap for the 100 pointer or whatever it was. I'll figure it out and put it in the title. Probably just put 100 plus points. Let's just get rid of the drawings real quick. It was a long today. Obviously, couldn't have gotten 100 points short at any point. Maybe. Wonder if you could have gotten it here. No, not even. So, first thing was, 14. What the hell? I'm thinking 14 because I'm thinking of 140. 115 is crazy. 15, please. Thank you. Let me get this picture here. Copy. Okay. Paste? Yes. So, this was yesterday, 11:17, which is 1:17 p.m. Eastern, because I'm on Mountain Time. So I think we need to take 140 before taking, I meant to say these highs at 271 to 300. I was just kind of eyeballing the highs, but obviously the highs are all the way up to 340, it looks like. But I just wanted to, take the 270 high and the highs in the 300s as well, just basically going into all-time highs. But not super confident that it was necessarily going to make its big bull run into the all-time highs today, but just, that it was going to come and get up in here at the very least. So someone actually asked me in the premium server, how did I identify 140 as a level of liquidity to look for longs below? But that was what time was it that it was like 1 yesterday, so it was around here. We were around here between these two candles when I said that I think we're going to go take 140 and then we're going to go take the highs. And then we're wondering why. So we had the makings of a pullback here, which when you have the makings of a pullback, it doesn't necessarily always have to go get something, but if there's low-hanging fruit, then I always just assume that it's going to go get it. I didn't take a short, just betting on it, but I do think it makes sense that it's going to go get it. And then once it does, continue its bullish trend, because obviously this is bullish, duh. So the reason that 140 looked like low-hanging fruit to me is because if you're using fractal structure concepts for your candlestick structure, then this right here needed to be closed below, because this big bullish candle brought us up. So if you're kind of looking at it fractally, if you're high, you're low, you're high, you're low, and then you could call this really the high, but I mean it does end up getting higher, and you would cover the wick if it was actually a swing and you were making a zone. So it comes down and it gets below that little fractal low, but it doesn't close. So because it doesn't close, we don't count it as a pullback. In this instance, we would count it as an external high / pullback, also known as pullback. This bullish candle that brings us up here gets closed below nice and hard. So we would just go ahead and cover our wick and say, here is our external high. Once we close above our external high, we have a new swing point, our new swing, and that's going to be from here. And I'll just go ahead and cover this little wick over to the right here. So it's going to be from here to here. And this is sort of your breaker or your SNDR or whatever for getting us a 2-hour flip up above here. And it's also probably going to be the SNDR or breaker for getting you above here as far as actual structural swings on the 15-minute. Unless I'm wrong, and I'm not trading right now, I'm not in a trade right now, but it could make a pullback here and come and close below this, and then after closing below that, it could come back up making that a swing, making that the actual breaker, SNDR, whatever you want to call it. But anyways, back to the trade. So sweeping it out, this is not a valid pullback, so therefore this is not a valid structural swing. So therefore this is what I call an NSL. NSH, NSL, those are non-structural highs, non-structural lows. Non-structural highs and lows are always low-hanging fruit in my book for liquidity. And then on top of that, I also have noticed, not that I'm like an ICT guy, because obviously if you know me, you know I'm not. But this fair value gap right here, I do notice that a lot of times when people are trying to look and identify like which one is going to work, a lot of the times you just wait and see like which one works first, and that's going to be the best one. And this happens to be that. I mean, which one's going to work first? This happens to be the one that worked here. So it seems like this is going to hold its integrity, and that we're not going to go close below this, that we're going to respect it. And it's interesting because, you know, when we tap into it over here this first time, we actually did get a reaction. And then we go down, and then we go up, and then, you know, take longs. So first thing I did was a scalp right here. So once we went and took out the low that I wanted to get swept, let's go down to the 5 second. Once we went and took that low out, price came up and flipped bullish. And let me see. Low, high, low, high. So we flipped up. We flipped up here, and then when we got this like big volume, because obviously this whole thing is the swing. So this whole thing being the swing right here means that when we close above it, we make a flip zone right here. When we make a flip zone right here and we close below it, and then we take a liquidity point, and then we run up real hard, and then we come back down and we run up real hard, that's telling me that this little thing, especially at market open, this little 5 second flip zone probably doesn't want to hold very well, especially since the higher time frame is calling for it to go up. Not only that, but if you're going to look for shorts to actually play out of a zone like that, you would probably want to see a retracement up at least to get into the range of where these lows previously were. And at that point, you've fully flipped up after sweeping this liquidity. So like hell or high water, we're going to get up here. And I think that us ending up here is a bullish move rather than a retracement for a bearish move, because of the bias. And so the scalp was, let me look. I'm getting old. I can't even see that shit. 180. What did that say? Let me see. There. Scalping. I put it in here. A 166. 166. And then this ended up turning into a bigger move. So then I like shifted it from the scalping chat to the signals chat. 166. Yeah. So at this point, it's like, this is probably going up. Maybe I got in here, maybe I got in here, but I don't remember. It might have been on the first or the second, or maybe I like added one and then added another, but 166, stop under there initially, and then was just, I think I took partials, I set it like 25, and then it turned into a bigger trade at that point. So I added to my position around like 188, and then I think I added back to my position again when it came down to like 166. So what we're going to be reviewing is the trade that I added to, because this is a trade with a model. It's hard to teach intuition. I could sit here and talk about why I took that long all day. You guys don't have a model, and you might not have the same experience or intuition, but I can teach you this. So we have a low, a high, a low, a high, a low, and then a high that goes and breaks this high that created a lower low. So this is what they would call the protected high. And because it goes and sweeps that now, this is what we would call the protected low. This is a flip zone right here on the 1 minute. And if you have seen my Mark II video, that video sucks. So you probably don't really even realize that this right here is the Mark II, but a lot of people who have been speaking with me and getting clarity on it have come to understand that. Actually, I want to share this trade that Sparing Nickel did, because this was a crazy trade. Really good trade. He said, my best trade to date. He was very, very happy about it and said that he's very happy with his experience in the premium section so far. So I'm really happy about that. This is where he said this is his best trade to date, was go ahead and took his long here. I think this box is an invisible zone because he's got like a high and a low, and then we go and take the high, low, high, and then we actually have a failure low here finally that begins its downtrend, or lower low. And so he drew out an invisible zone, and then he also had the Mark II right here. He also had, obviously, me signaling to go long at 166. That was an incredible trade, though. And yeah, here's the model, essentially. The reason why I told people getting in at around 166 is what I think I put that limit at. Let me go to the chat real quick. One small size. So I had my limit at 168. I'm really not stressing too much about this. So, okay, yeah, here, 168 instead. Sometimes it doesn't touch it. I think I was just eyeballing it. But either way, let's talk about this trade. So did I get in and chase it? Yes. I chased it starting at 188 because I had taken profit on my scalps and I wanted to add to my position. So it started out not super great as far as RR goes, but taking profits along the way and then adding when it comes lower makes all the difference in the world. So I had a limit at 168, it appears, and scoot that on over. And then looking for price to come up to the 270 or higher area. So, right at 100 points right there. Anyways, price makes a draw on the higher time frame, on the 15 minute, takes out a non-structural low. Price makes a 5-second flip down and then flip right back up, and it also creates a 1 minute flip up. We make a Mark II. The reason this is a Mark II is because this is a flip that we believe is significant and has purpose. And this is the lowest point that price reached into the zone. And then once it reached into that zone, the other factor of identifying a Mark II that's actually going to work is, did that low cause price to go run the high that it came from? And it did. So I explained to the group that you expect price to go run the high that it came from once you go back to the Mark II. Essentially, it's like double dipping, right? Go in, go here, tap in, boom, go take that high, go do your thing, yada, 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 whatever, come back down, take it out. Now, here, one of the reasons why you sometimes want to wait and why a limit isn't always a good idea is because price sort of flipped down structurally on the 1 minute. So with price flipping down and flipping to bearish order flow, bearish structure even on the 1 minute, you could be making a bad decision and trying to long this when clearly we're just going lower low, lower high, lower low, right? But I feel okay about it because this is coming from a higher time frame draw. and because on the 5 second, I waited, I did leave my limit on, but I was gonna cut it if this didn't hit. And sure enough, right here, it does give a flip up. So this bearish candle brings us down. We're looking to close above it. We don't close above it, so we're looking for the next body that goes below it. Once we identify the next body that goes below it, which is this candle, we're then looking for a closure above it. When we get a closure above it, that constitutes a pullback, meaning this is a low, this is a high, this is a lower low, and this is a higher high, making this a flip on the 5 second. And because we flip on the 5 second, right when sweeping that, and we're not holding down here, I mean, that's just all the confluence in the world for me. We've got the higher time frame at play, the lower time frame at play. Everything is calling for it to go up, so I'm going to go up with it. And then as far as targets go, let's talk about the higher time frame reasoning as to why I didn't think that this was bearish, because I made a trade recap picture, which I can go ahead and do a video for sometime soon from the past. But I took a trade from here. I took a short, and then I took another short, and there were big shorts that week, very good week. I was explaining that the 2 hour was bearish. And so why is it that I'm seeing a pullback on the 15 and thinking, oh, bullish? Well, it's because common sense to me says, one, we made a draw and then utilized some of the liquidity in this to begin with. And secondly, without remorse, we get this high into the zone? I don't think so. I mean, I can see it making a pullback, right? I can see it making a pullback, but if you're talking about, like, dude, is there like a Fibonacci level for this? Hang on. Let's put it at like 90, 0.9. Oops, that's upside down, hang on. We're talking about above the 90. We're talking about like 95% up into this thing. After utilizing some of the liquidity inside of it, after creating this bullish trend channel on the 15, after the 15-minute makes a fake flip up. So that's one thing that's really significant too in this whole narrative. I wish I had left structure on my screen because it would be really useful right now. But essentially we tap in, we flip down, and then we flip right back up over that. And I actually was able to get the long, did I do a trade review on the long already? Is that when did I do the last trade review? If I didn't do a trade review on this long, then I'll do one. I just can't remember if I did it or not. I was supposed to do a trade review. I took a long at like 7 a.m. Eastern time, because I knew it was going to come through this, and I knew it was going to go all the way up to at least halfway here. Yeah, what is that? The 106 point long. I did a video on that. Dude, when was that video? Am I like in the twilight zone? Did I do that video literally yesterday, or am I just tripping like really hard right now? Hang on one sec. Let me pause this. Okay, that's really weird. Yeah, I took a long for like 160 points here, and then I'm pretty sure I took another one. I'm gonna have to look back, and then I can review that as well. Maybe I'll do that at the end of this video, review that one as well. And it can be like 2 birds with 1 stone on this video. That's so fucking weird. What? That is so weird. Anyways. Yeah, the other one was 4 days ago. It was like this thing. Okay. So why is my bias bullish on the higher time frame for going through this 2 hour? Same reason that it was bullish, that we're going to go through all of it down here. Price flips down, price flips up. You have a zone right here. We go deep up into this zone. And after going deep up into this zone, the 1 minute tries to flip down, and then it gets run up again, and then it tries to flip down, and then it gets run up on. So once we get up above this 50, between the 50 and the 70, and we're making fake flips and we're pushing through, like, the bias just completely changes for me, especially after it happens here. I did take the long and capitalize on this move, but after it happens here, it's just like, okay, we're definitely going to run through and flip over the 15. We're definitely going to probably run really deep up into here and most likely run all the way through the 2 hour as well. So you have to pay attention not only to just, you can't just be a robot and pay attention to the patterns. You have to have intuition in this game. You have to have like an understanding that what matters the most is not what you consider structure, it's what the market considers structure. So you have to get inside of the mind of the market. That's what intuition means, is to get inside of the mind of the market. So yeah, that's the recap for that long. Yeah, again, it was just looking for the sweep, looking for bullish behavior, looking for a bullish entry model, an excuse to go ahead and get in, go ahead and protect yourself, and then boom, go head for your targets. That is it. I'm actually just going to go ahead and end this recording here, and then I'll make a second video real quick recording the recording the long from, I guess, yesterday, and I will get back to you guys on that, probably post it like tomorrow, that way I'm not spamming on my YouTube and get shadow banned or some shit. Comment if you have questions, and if you have more in-depth questions, come join Premium. In my opinion, it's worth the money. We had a guy just post his P&L or payouts today. He took like 2,200 in payouts. He was saying, shout out to Magma. Thank you, bro. Appreciate you for shouting me out, Taiwo. He would have had more. He said he went on tilt on 2 of his accounts. He wasn't being patient, waiting for the signals. But still, 2,200 is good. That pays for 11 months of full price premium. Taiwo's in for half price at $100 a month, so that paid for almost 2 years of premium for him on those payouts. So hopefully he sticks around and we can just keep on going. He can get a nice ROI on his monthly investment with being with me. And I really appreciate that there are a couple guys in here who are really trying to learn as well. PTFX, Taiwo, Sparing Nickel have been asking questions and wanting to actually learn. Elias as well. So it's cool to see guys like not only want to get the signals, because obviously signals are great, like seeing my trades, knowing that I'm profitable, being able to copy them and capitalize on those movements is great. I don't think there's anything wrong with that. But then, on top of it, actually learning how to follow along and hoping to develop those skills for themselves so that they can understand the future. I really don't mind answering the questions of the people in the premium section, because it's like, I'm not going to try to gatekeep info and just force them to stay in the group or anything. I think that they're probably, pretty happy either way. So yeah, on to the next video. I'll see y'all in that tomorrow. Peace.